Hey folks, Dan Frio here with your opening bell for December 3rd, 2025. So breaking news out just now. ADP came out and payroll numbers, they're dismal. They are dismal according to ADP, but that's kind of what ADP always comes out with. So how's this going to move the markets? Well, let's jump over to the mortgage rates today, because if you're watching this video, you're most likely a homeowner. Maybe you're a home buyer, realtor, loan officer, trying to figure out what the heck's going on with those and the whys behind it. So today, folks, we're going to talk about the ADP payroll report. It's actually, I'll say, good news and bad news. So let's get over to what my expectations are. We're going to talk stocks, bonds, cryptocurrencies, and these things. So let's get over to it. So here's what I'm thinking about today. The ADP payroll numbers came in. They're pretty darn dismal, but ADP always kind of seems to miss. So what I want to do is I want to go over to the markets. Let's go over to see how the equity markets are doing first, and then we're going to see how the bond market's doing, because the equity market should pull off from this data, because it's saying, okay, the jobs reports aren't good. That's not good for our economy. But on the flip side, this might be a solidifying that there is going to be a rate cut for sure next week. But the dilemma here is tomorrow we're actually going to get government numbers on the employment number. So what's my take on all this? Let's get over to it. Here's what I'm thinking. I'm thinking the bond market's actually going to do fairly well today on this, because this is going to solidify the Federal Reserve has to cut rates, okay, at this point. So we're going to go over the bond market in a second. If you go to the equity markets, here's what we're seeing right across the board. It's green all the way across the board. Even oil, well, I'm not too concerned about oil, because we need this below $60 a barrel, and it is. So if you're a little confused what I'm talking about, let's put all this stuff together. If you're watching this video, you're trying to figure out, okay, is now the time to lock in that rate to refinance, or is it now a good entry point to maybe buy that first house? So let me give you my take on where things are going to go today, and basically the whys behind it. So the news that we got out from ADP was actually good news for bonds, but it should have been bad news for the stock market, but it wasn't. Why? I don't think a lot of people are giving credence to the ADP payroll report. And also tomorrow, we're going to get some more data tomorrow that solidify how the job market's doing. So let me give you my thoughts on this. If we go over through here, here's what the economic calendar looks like. We got ADP payroll numbers today. They came in, and the last reading was 47,000. They thought it was going to come in about 5,000, a lot less than where it was. It actually came in negative. So it's a huge miss here. But what we're going to get tomorrow is actually the government numbers on initial jobless claims. So I think the markets are going to hold off for this. And then another piece of information coming out the next day, on Friday, is the PCE. This is the number one inflation measure that the Federal Reserve monitors. So between Thursday and Friday, we're going to get government numbers that's going to fill into the Fed and actually make their decision for them next week. We kind of know what that decision is, and maybe the ADP payroll numbers help for that today, but I guess it couldn't hurt. So I'm not really giving much validity to this, because their numbers just seem to be dismal. But we'll look at tomorrow's data, but this is helping the market. So let's get over to what the markets are thinking behind this. So you go to the bond market, and this is basically saying to the bond market, if you're new to this channel, here's what we follow. We follow mortgages through a mortgage bond, and we follow it through here. So if you're a homeowner, how do you follow these things? Well, we have a tool that I created. If you go to our the rateupdate.com, here's my website. If you're new to the channel and you have a mortgage, you're a homeowner right now, and you're just thinking, okay, Dan, when should I lock in and refinance? Does it make sense? Well, put in your mortgage information right up through there. It's called RateWatch 2.0. Put in your mortgage information. Let me know what rate you'd be interested in us contacting you, and we'll go over the numbers with you. It's no hard sale. We're not selling your data. It'll be me reaching out to you to see if the numbers make sense. But let's say if you're looking to build, you're looking to buy, how do you take this data and extrapolate it out to say, okay, where's these things going to go from here? Well, let's look at some of the other data that's coming in this week. Let's fill in the void of what most likely the Fed's going to do at this next meeting, and then I'll tell you what you guys should probably do with all this data. So let's get over to it. The FedWatch tool, we go through this each day. What this tells us is the most likely odds of a Fed rate cut. So the CME FedWatch group, right up through here, that's the Chicago Mercantile Exchange, they survey options and traders, and they go down through here and say, okay, in 7 days, the Federal Reserve's most likely going to do what? Well, are they going to cut, or are they going to just freeze where they are? Well, there's basically a 90% chance right now the Federal Reserve is going to cut rates. So what this is telling us, at the December 10th meeting, there is a 90% chance that there's going to be a rate cut. Now, the odds going forward for any additional rate cuts from there, those are in question. We're not going to worry about those. We're going to focus in on this right through here. So let's get over to what my expectations are. If you're looking to buy within the next 30 days, lock in. Just lock in and don't worry about it. Okay, so you don't have to worry about all these volatilities. Here's the cool thing about us. I'm going to post a little short video up right up through there. It was kind of cool. I did a live event yesterday, and I said this segment of explaining who I am. So if you're new to this channel, who I am is, my name is actually Dan Frio. Yes, I'm the host of the Rate Update, but I'm also a licensed mortgage loan officer in all 50 states as well as Puerto Rico. I have a slogan. That slogan's one application, one credit pool. We're going to compare your loan to over 30 different lenders. And people are like, how do you do that? Well, let me give you that information a little bit later in this video because I need you to understand where rates are going to go, because if you're watching this video, that's most likely your concern. So if you're closing under 30 days, just lock. You don't need your blood pressure to go up, especially during the holidays. So lock in. I don't think rates are going to get that much better. If they do, well, that's why you use us, because we work with over 30 different lenders. If rates drop over 0.25%, we can actually move you and take advantage of that rate. And I'll explain again a little bit at the end of this video. But right through here, if you're looking to buy maybe in January, February, just a few months out, reach out to us. Monitor, subscribe down over there. So every time I post a video, you get an alert, and I'll give you some advice. Should you lock or should you float? Okay, so if you're not closing for 3, 4, or 5 months, just float. We're going to have a whole new look at the Federal Reserve. We're going to have a new Fed president. We're going to have, I think, 1 or 2 new Fed members. We already have 2 that Trump picked already. So we're going to have 5, 6 members of the Federal Reserve that's going to vote exactly how President Trump wants them to vote. I got no problems with that. So that's what's most likely what the outcome is going to be in 2026. And I'll be working on my forecast for that. But don't look a gift horse in the mouth. Just because a lot of the data is pointing to rates being cut, we could get a tweet. We could get anything that could cause these things to take a jump up. So let me give you my feedback on what I think is going to happen the rest of this week. Here's what's happening in the bond market right now. It's up 8 ticks. So what this means to you guys is, this is actually pretty good news. This is a bond that trades on Wall Street, and how you read this thing is, if you're given the price of the bond, which you're seeing up through there, it's 101.27. How do you figure out where the rate's going because you're getting a price? Well, it's easy. If the price of the bond goes up, rates are coming down. We love when the price goes up. Here's what happened yesterday. This is what caused rates to come down yesterday. Okay, so we had the bond market running. We had a big move right through here. This is the opening bell. It usually fills in a gap. Here's what I talk about. So rates open right about here this morning. Usually the gap gets filled, the gap between these things right over here. So don't be surprised if the bond market comes down a little bit. That means mortgage rates go up. But based on this ADP report, I think the markets will just be stagnant until tomorrow's data. Tomorrow we're going to get the initial jobless claims from the government, as also the PCE. Why that's so important? Well, those are the things the Federal Reserve monitors. So if you want to see what the Federal Reserve monitors, that's right through here. I usually go over this each day as well. We got the PCE, that's the inflation that they monitor, the unemployment rate, and the GDP. This is the federal funds rate they control. Why this week's news is so important, if you go over to here, what are we getting? We're getting job numbers through here. Then we're getting the PCE numbers right through here. And we get kind of a hint on where the jobs reports are through here with the ADP payroll numbers there. Why this is so important? Well, look at it. If you're looking through here, we get the PCE on Friday. We're getting the jobs report and the major job numbers tomorrow. So most of this void is going to be filled in tomorrow. So I think the markets are going to stay steady right now. This will have a little bit of an uptick. We might have a little bit of an uptick in the markets as well. But I think the traders that are trading on Wall Street based on what the bond market's going to do, if I'm them, I'm going to wait for tomorrow's economic news from the government, because I really don't like ADP's numbers. So basically, I'm thinking mortgage rates, they're going to be maybe a little bit better to flat. I think the stock market will be kind of staying teetered right through here. We need the direction on where the jobs reports are going, because that's the main focus on where the Federal Reserve is looking at right now. So hopefully I filled in those questions to you on what the heck's going to go on with those and the whys behind it. Now, over to me, what do? So I keep telling you guys I'm a federally licensed mortgage loan officer. Yes, I'm in every state as well as Puerto Rico. Our slogan, though, that's the interesting part. One application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? Well, think of a broker. Have you ever used a broker? So here's what we do. We're set up with over 30 banks, lenders, credit unions. So when you call, I'll get you approved. Then I can use all their rates to facilitate you. We're going to do all the shopping on your behalf, and you're going to work with me, yours truly, during this whole process. To get involved, just reach out to us right through here, therateupdate.com. There's all the tools up there above. And then we just posted a new video right through here, portable mortgages. Check it out. Is that a thing that might be coming down the pike that the president just announced? This possibility of this, they announced it when they announced the 50-year mortgage. The 50-year mortgage fell flat on its face, but this has some traction. So check out the portable mortgage if you're a homeowner right now. This might be some exciting news for you. So that's our report for today, folks. Thanks for joining me. I will be back today at the closing bell to let you guys know how all this ends for the day. Thanks for watching. God bless. Don't forget to subscribe down over there. And if you need any help, please reach out to us. We'd love to help. Have a great day, folks. I'll see you later. Bye-bye.